Good morning. Thank you guys so much for tuning into today's video. To begin the live stream today, I do want to take a look at the economic calendar. So we have today, keep in mind that today is a day right after a bank holiday. I believe Monday was President's Day. And so I don't have much to really anticipate for today's, at least based on the daily candle. So here on the daily candle, we don't have a daily bias because we have taken out the daily high and the weekly high. So after taking out the weekly high and the daily high here on Monday, I no longer have a weekly bias, right? So after a weekly bias is complete, I have to use the daily time frame or the intraday time frames for a higher time frame bias. And the daily candle here, we have taken out previous day high. So that means that we've completed the we've basically already completed the daily time frames objective, right? So I can't really use the daily time frame and the weekly time frame anymore for a higher time frame bias. So coming into today, I would like to use the 8-hour time frame and the 4-hour time frame. So I would base my bias here coming into this morning on how we close here on this 4-hour candle and this 8-hour candle. Like right now, I can anticipate for lower prices, right? Because notice how the 8-hour candle and the 4-hour candle is forming right now. It's a pretty bearish candle. So that means I can anticipate for us to take out the 4-hour low and the 8-hour low. At least that would be my higher time frame objective. I still need a model and I still need a entry pattern for me to really enter a trade, but just simply based off of how we are looking, I would anticipate the low to be taken. But yeah, keep in mind that there is SMT here between ES and NQ. So ES has actually taken out this swing high and NQ hasn't. So there's SMT between that swing high right there. So I'm gonna note that as SMT. So there's SMT there. So we have about 25 minutes left until we close here on this 4-hour candle and this 8-hour candle. And like I said, I want to see how we close first before I really, confirm a bias. But yeah, those are the two time frames as of right now that I would use for a morning objective. The reason being I'm able to do this is because every single time frame has an objective, right? Like here, if we were to take a look at this weekly candle, the weekly objective for this candle would be the weekly high, right? It's like this specific candle here. Like I can anticipate for the next weekly candle to take out the weekly candle's high, the previous weekly high. So that's an objective. But every single candle has an open, high, low, close, right? Like with this daily candle right here. With this daily candle, I can anticipate the same thing. I can anticipate for the next daily candle's high or the next daily candle to take out this specific candle's high. So every single candle has an objective. If that's the case, I should be able to apply the same power of 3 concept to the 4-hour candle. I can apply it to the 1-hour candle. I can apply it to the 30-minute candle. So every single candle here has an objective. And you always have to be trading in the with power of 3 in mind, right? So always think about what is the next candle going to do. Is it going to be Is it going to create a open, low, high, close, or is it going to create a open, high, low, close? So if you know if it's going to be a down close candle, or if you can anticipate for it to be for the next candle to be a down close candle, then you want to be a seller. You want to be a seller in this area right here. You want to be a seller where prices are trading above the open, right? This part right here is like us manipulating, but it's also us manipulating into some sort of fair value gap, into from the previous candle, right? So the previous candle could have been like, oh whoops, it could have been like this. And we're just manipulating into a, like, you know, a fair value gap. But if you know the whole concept I'm trying to I guess say here is that if you know a candle is going to be a down close candle, your best sales are going to be above the opening price, right? And every single candle has an opening price. Like this specific candle's opening price here would be here, right? Every single candle has an opening price, and you have to mark that, and you have to make sure that you know what it is. I think that's how ICT kind of like implements all of those time frames together, or that's how I'm thinking that's how he does it, right? But yeah, I mean, right now, as of right now, on NQ, I don't, like I said, I want to wait until we close here on the 4-hour candle and the 8-hour candle for me to really confirm a bias. But like right now, we don't really have much bias going on here. Yeah, we don't really have much. So I'm just going to wait until we close here on the 4-hour candle and the 8-hour candle for a bias. Dum ba dum 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 dum. And yeah, like I said, we don't have much volatile news, at least in the New York AM session here. We do have this red folder news here, but it's at 9 p.m. So that's not really going to affect the markets, at least in the New York AM session and in the New York PM session. That's like overnight, almost in the Asian session here. Tomorrow we have FOMC meetings at 2, which this isn't actually like FOMC. It's just, I don't know how to explain that, but it's not actually FOMC. Thursday we have unemployment claims, and then we have flash manufacturing PMI and then flash services PMI on Friday. I do want to take a look at some of the pros and cons here from previous week. But I do want to go over a trade here. I do want to go over some trades here from like a couple weeks prior to this one. And so here I'll go over this trade. So in this specific trade here, my higher time frame objective would be based off of how we closed here on this 30-minute candle. So the way that we closed here on this 30-minute candle, I can anticipate for us to take out the 30-minute candle's low and to actually, for the next 30-minute candle, to expand towards the 30-minute low, right? So that would be my higher time frame objective. I want to see bearish price action to attack this 30-minute low. And notice how we create this 30-minute fair value gap as well. So this current 30-minute candle's closing price is lower than the second fair value gap candle's low. So because we close below this candle's low, this fair value gap ends up or should be treated as a breakaway gap, at least for the next 30 minutes, right? I want to see us treat this fair value gap as a gap that doesn't get rebalanced for the next 30 minutes. So like I said, my higher time frame objective here is lower prices based on the 30-minute time frame. And to align myself with the 30-minute time frame, I go on to the 15-minute time frame, right? To see if there's alignment between the 15-minute and the 30-minute. So based on how we close here on this 15-minute candle, I can anticipate for the 15-minute candle's low to be taken. So now that the 15-minute candle is in alignment with the 30-minute candle, there's a correlation, right? So the 15-minute candle suggesting lower prices, the 30-minute candles suggesting lower prices. And notice how the 15-minute candle's low is different from the 30-minute candle's low. That means that we should expand lower towards the 30-minute low after taking out this 15-minute low. So my higher time frame objective, the 30-minute low, my model's objective to align myself with the higher time frame order flow would be for us to take out the 15-minute low. So now that I have a higher time frame objective, now that I have a model, I would try to go and find an entry pattern. So based on how we close here based on how we closed here, I can anticipate for prices to trade up into this 1 minute fair value gap here. I didn't really highlight this in this specific trade, but yeah, I want to see us trade up into this 1 minute fair value gap. I take my entry here, and notice the way that we created this 15-minute fair value gap, 15-minute candles fair value gap here. We should also treat this fair value gap as a breakaway gap. So notice how our model is here. This is our candle. This is the candle that we're basing our trade off of. Notice how this candle's closing price is below the second fair value gap's candle's low as well. So that 15-minute fair value gap should be treated as a breakaway gap, meaning it shouldn't be rebalanced, right? So I actually have my stop loss in alignment with that 15-minute fair value gap, or that 15-minute breakaway gap. And my first initial target here would be the 15-minute low. After we take out the 15-minute low, we should expand towards the 30-minute low. And in this case, we actually end up taking out both the 15-minute low and the 30-minute low. And notice how the standard deviations here of this retracement leg, so prices trades up, retraces back into a 1 minute fair value gap. I take my entry. That retracement leg, I use it as a standard deviation projection. So the negative 0.5 and the negative 1 standard deviation aligns perfectly with existing liquidity. So because it aligns itself with like existing liquidity, it's more likely that these standard deviations are going to be hit, right? So in this last slide here, notice we take out that 30-minute low, we expand lower towards the negative 1.5 standard deviation, and we expand towards the negative 2 to negative 2.5 standard deviation. This right here is pretty algorithmic, right? We respect this negative 2 to negative 2.5 standard deviation. We kind of stall here. We wait for the right time, and we continue to trade off lower. And then we end up taking the negative 4 standard deviation, and that's actually when we actually start reversing here. But yeah, this is a like an ideal trade, right? This would be called an expansion trade because we're expanding lower towards the 30-minute low after taking out the 15-minute objective. So to recap this trade, the higher time frame objective is for us to take out the 30-minute low. For me to align myself with the 30-minute order flow, I base my model on the 15-minute candle. So both the higher time frame and the lower time frames are suggesting lower prices. So now for me to actually take this trade or my entry pattern, I take it based off of a 1 minute fair value gap that supports bearish price action on the 15-minute time frame. So that would be like a recap there. Pretty easy and breakdown of a trade at least. And yeah, coming into some of the pros and cons here from last week. So from last week, what I should continue to do in this week is to be consistent, right? Every single trade that I take, I should have a higher time frame objective, I should have a model, and I should have an entry pattern. Just like the trade that I just went over with you guys, I should be able to explain and I should be able to identify those three components in my trades. And if I can't identify those components, then I should simply just sit on my hands and not take the trade at all. There are going to be times where I know what the higher time frame, or I can anticipate what the higher time frame objective is. Like, it's kind of clear where prices wants to go, but there's not a model to align the higher time frame order flow with the lower time frames, right? There will be cases when that happens, and if it happens, you have to sit on your hands and be disciplined and patient. So practice consistency. Second, being able to execute, right? Whenever there is a trade opportunity that actually does present itself, I should be able to take the trade without hesitation and simply allow my strategy to play out, right? There is this quote that I encountered last week, and it was, if you know how to make $10, don't be afraid to risk it to make 20. And that's like basically all businesses are like that, right? If you know how to make $10, if it comes to you like easy, then don't be afraid to risk it to make 20. But that doesn't mean to like gamble everything, right? And third thing here, staying patient. Like I said, there are going to be times where the conditions in the markets are not in alignment with the strategy that you have for yourself. So stay patient, stay disciplined. Don't force things to happen. Allow it to come to you, trading wise. And going back to the actual charts here, I do want to take a look at the charts because I don't want to miss anything. So we do end up taking out previous day low and previous. So we've taken out previous day high and previous day low, which is pretty interesting. So now coming into today, notice how we've retraced back inside the dealing range, this 4-hour dealing range, right? I can just tell that this is a 4-hour swing high or a 4-hour swing low, and this would be a 4-hour swing high. So a swing high and a swing low creates a dealing range, and which is essentially what I just did right here. And in a dealing range, there's premium and there's discount. What I'm drawing up right now is considered discount, and this would be considered premium. Alright, so if we were a buyer here in if we were a buyer in this market right now, you would want to be a buyer within this green shaded box right here, right? Because that indicates that it's considered cheap, right? Equilibrium. So equilibrium is the halfway point of a swing high and a swing low. And equilibrium separates discount and premium, right? Like I said, we technically have retraced back into the discount of this specific dealing ranges discount level. So that would have been an objective coming into this morning, but because we have already retraced back into discount, I can't use it as an objective. I just wanted to point out that there is premium and discount in the markets as well, and like there's even daily dealing ranges as well, but I doubt we're going to trade back into this specific dealing ranges discount level today. I don't think that's going to be the case coming into today, but just wanted to draw your attention towards that discount level. The hourly low here. Notice how the hourly low is the exact same low as the 4-hour low and this 8-hour low. So because the hourly low is the same low as the 8 hours low, I can anticipate for us to complete the 8-hour objective within the next hour, right? This idea is called scope, and because it just means that like the 8-hour objective is the same objective as the hourly objective, so it allows you to kind of zoom in into time frames to understand when a specific higher time frame objective should be completed. So like I said, the 8-hour objective should be completed within the next hour. And yeah, we made a pretty massive sell off here, to be honest. Like, it's interesting. Some of the things that I do want to watch for is this is Delta, right? Yeah. So Delta, I want to see how they react to the crash that just happened. So Delta actually just got, there was a Delta plane that got into accident, and I mean all the passengers survived, but with the news that came out, I do want to see if we're going to sell off here on Delta, but I mean we'll see. I'm not really a stock trader, I'm more of a futures trader, but I just do want to start kind of watching for these new things too. And NUI is a American steel creator, right? They create steel for us in the United States, and President Donald Trump just actually implemented a tariff on the steels coming from China or coming from Asia, and I don't know if he's placed more tariffs on like other countries, but I do know that because the steel production or the steel supply from other countries are going to be lower, the demand of steel production in the United States is going to increase. So I do want to see this company here possibly trend up higher. But I mean, anything could happen. But I'm just, this is like very, very speculation. Like I said, I'm not a stock trader, a futures trader. going back to NQ, let's take a look here. We are about to close here in about 3 minutes. And like I said, the hourly low is the same low as the 4 hour and the 8 hour. I could anticipate that we should take out the this hourly low here, or we should take out the 8 hour low within the next hour. But if I were to go onto the 15-minute time frame, I can see that the 15-minute objective here is for us to actually rebalance this 15-minute fair value gap. So notice how the hourly low or the hourly objective is lower, right? But the 15-minute, the current objective right now is for us to rebalance this inefficiency on the 15-minute time frame. So higher time frame is suggesting lower prices, but higher time frame objective is suggesting lower prices, but the lower time frames, this being the 15-minute time frame, is not suggesting lower prices. It's actually suggesting the exact opposite. So that means there's no time frame alignment between the 15-minute and the hourly. So I have to wait until the 15-minute time frame aligns itself, if it does align itself with the hourly time frame. So what that means is I want to see us open up on this 15-minute candle, on this next 15-minute candle, trade up into this inefficiency and respect this 15-minute fair value gap and create a bearish 15-minute power of 3. If we can do that, then I'll consider taking a trade. But as of right now, like I said, there's a misalignment between the 15-minute time frame and the hourly time frame. So I'm not going to force anything here. I'm actually just gonna keep this 15-minute fair value gap as a, keep it highlighted, just to note that that would be my objective right now coming into the 15-minute, coming into the next 15 minutes. So yeah, I do want to see us rebalance this inefficiency, trade up into this inefficiency, respect it, and create a bearish 15-minute power of 3, a 15-minute candle, a bearish 15-minute candle. Uh. 50 seconds left, about 40. If we close below this candle's low, if we close below this red line here on the 15-minute time frame, then you would have to treat this 15-minute fair value gap as a breakaway gap. But if we close above this red line, then I could treat this fair value gap as a gap that gets rebalanced. But if we close below it, treat this 15-minute fair value gap as a breakaway gap. But we'll see. Sometimes, even though we do close below the red line, we do tend to rebalance it if it's a bearish candle. So in this case, we actually closed below the red line. So let me zoom in a little bit closer here. So we actually closed below this red line here, which is the second fair value gap's candle's low. So because we did that, I would have to treat this 15-minute fair value gap as a breakaway gap. So this upcoming 15-minute candle, we could expand lower towards this 15-minute low, but the way that we close here on this 15-minute candle, it's not suggestive of lower prices. It's kind of like, I don't know, but we could end up consolidating this next 15-minute candle, the current 15-minute candle right now, and we could end up rebalancing it with the next 15-minute candle, but who knows? Or we could just end up taking out the 4 hour / the 1 hour / 4 hour / 8 hour candles low. We could just do that. But yeah, I would have to treat this 15-minute fair value gap right here as a breakaway gap coming into the current 15-minute candle. This is the opening price. So we actually did treat that 15-minute candle, that 15-minute fair value gap as a breakaway gap, and we just completed the 4 hour objective / 8 hour objective. Or sorry, we did complete the hourly objective / 4 hour objective and / 8 hour objective within the first hour, right? And like I said, I was anticipating that because the hourly low is the exact same low. This current hourly objective is the exact same objective as the 4 hour objective and the 8 hour objective. And what concept is that called? It's called, like I said, it's called scope. And now, because we've completed the morning objective, at least for right now, the next candle that gets closed is going to be the 6 hour candle, and we close on that candle in about 2 hours. So I have about 2 hours of just like pretty much not doing anything. So now I actually do want to finish off the pros and cons here coming into this week. So what can I work on coming into this week? Well, I can work on continuing to be constantly aware of my thoughts and my actions, right? To be mindful. And one way that I'm doing that is I have a almost like a vision board right in front of me as I'm trading, and the pictures and things that I've written for myself, those things remind me of what I should continue to do, right? What are my future plans and how am I going to accomplish those plans? Second, be confident, speak clearly and effectively. The person I view that I can see myself in the future should and is very disciplined, right? He's a confident human being. So align my lower time frame with the higher time frame objective. So what I mean by this is view life in terms of lower time frame and higher time frame. So essentially the you right now, right, is the lower time frames. So in order for the markets to be efficient, the lower time frames needs to be in alignment with the higher time frames. So the me right now should be in alignment with the higher time frame, with the bigger view that I have for myself. Once those two things are in correlation, anything is possible. Some improvements here coming into this week. Continue to take consistent trades. Like I said, every single trade that I take, I should be able to identify what the higher time frame objective is. Well, how am I going to align myself with the higher time frame order flow? So essentially, what is my model? And how am I going to enter the trade? And sometimes there will be conditions where the markets aren't in alignment with your strategy. In those times, just be patient. Sit on your hands. There's no reason for you to really force anything. Second, coming to this week, like I said, I know how to make XXX amount. I shouldn't be afraid to risk XXX amount to make double that. Third, watch for SMT. SMT in the markets allows you to understand when and where there has been manipulation. So like I said, because there's SMT here between this swing high on NQ and its respective swing high here on ES, I can actually anticipate that there's been manipulation here, and this swing high that got manipulated could be a strong swing high. A strong swing high, or a swing high in general, is always going to be accompanied with SMT, right? And lastly, aggressive trading. And with that, I believe that's going to wrap it up for today's live stream. I don't really have anything else to really cover here for today. I mean, we've completed basically everything that I did want to look for, right? So we have completed the 8-hour objective. So like I said, just the way that we closed here on this 8-hour candle, this 4-hour candle, and this hourly candle, I can anticipate for us to take out the 4-hour low, the 8-hour low, within the next hour. Because like I said, it's a bearish candle. It's pretty simple approach towards trading, to be honest, but it works, right? It's a very, very easy. The way that this candle closed, the low-hanging fruit for this trade would be for us to take out, would be the 8-hour low. And after we complete the 8-hour objective, what do? You sit on your hands. There's no objective left on the 8-hour time frame and the 4-hour time frame. So you have to kind of like, not disregard, but you kind of have to put that aside, the 4-hour time frame and the 8-hour time frame, and you have to wait for new candles to be created, right? So this 6-hour candle, like I said, we close on that candle in about 2 hours. So if you just sit for 2 hours, there'll be a new objective that gets created, right? Same thing here on the 10-hour time frame. This 10-hour candle is about to close in 4 hours. So wait 4 hours, wait until we close there on that 10-hour candle, and then they'll present itself with a new objective. And yeah, like I said, that's going to be everything that I do want to cover for today. Thank you guys so much for tuning in, and until next time, be safe.